let me throw a fact at you that sounds, well, kind of impossible. Almost every single country on Earth is in debt. We're talking the United States, Japan, France, even the tiniest island nations. Pretty much all of them are in the red. So that leads to a question that seems to break basic math, right? If everyone owes money, who exactly is the lender? Answering this isn't just a brain teaser. It actually reveals the fundamental operating system of our modern world. Okay, so to get our heads around this, we've got to start with the absolute basics. What even is national debt? At its core, it's actually pretty simple. National debt is just the grand total, the running tab, of all the money a government has borrowed throughout its history and still needs to pay back. And here's how that tab gets so big. It's a three-step process. First, a government spends more money on stuff like healthcare, roads, and defense than it gets from taxes. Second, that shortfall for that 1 year is called a deficit. And third, you just stack all those yearly deficits on top of each other, year after year, and boom, that's your national debt. So really, the easiest way to think about it is this. Debt is just all of yesterday's shortfalls added together. It's not one big loan, it's a huge accumulation. But why do it at all? Why spend more than you have? Well, governments generally have three really big reasons. First, to give the economy a jolt when it's struggling. Second, to invest in huge projects that will pay off for generations. We're talking brand new highways, schools, that kind of thing. And finally, to get through massive, unavoidable crises. Like wars or global pandemics. Which brings us right back to our big mystery. If all the governments are the borrowers, then who on earth are the lenders? Turns out, the answer isn't a single shadowy figure. It's a huge, interconnected network. We're talking about major banks, pension funds that are investing our retirement money, and even other countries. A huge chunk is also held by regular citizens who buy government bonds. And, get this, a country's own central bank is often one of the biggest lenders to its own government. And that right there shows you just how tangled up the whole global economy is. Countries are constantly buying each other's debt. It's like a global neighborhood where everyone is perpetually borrowing a cup of sugar from everyone else. And this giant web of I owe you, you owe me, is weirdly enough what keeps the whole system stable. Okay, so this is probably what you're thinking right now. Wait a second. If a country can just borrow from itself and its neighbors, why not just fire up the money printers and make enough cash to wipe the slate clean? It seems like such an obvious fix, doesn't it? Well, the reason is a little thing called inflation. If you just print trillions of new dollars, all the money that's already out there, the cash in your wallet, in your bank account, suddenly becomes worth a whole lot less. Prices for everything would skyrocket, and people would lose all trust in the economy. It's a short-term fix that leads to a much, much bigger disaster. And this is where the story gets really interesting. Because for a country, debt isn't automatically a bad thing. We kind of have to rewire our brains to see it less as a trap and more as a tool. See, that sounds terrifying because we think of it like our own credit card bill. For us, debt is stressful. It has a deadline. We have to pay it off. But a country isn't a person. It doesn't have a lifespan. It can exist indefinitely. And that means it can just keep refinancing its debt, basically taking out new loans to pay off the old ones. It's a totally different ballgame. And if you look back at history, you see this really clear pattern. Debt doesn't just creep up, it spikes during massive crises. After World War II, countries borrowed unbelievable sums to literally rebuild continents. In 2008, they did it to stop the entire financial system from collapsing. And in 2020, they borrowed to fund the economic stimulus. In these moments, debt isn't the problem. It's the only tool big enough for the job. So how is this sustainable? Well, the secret isn't the total dollar amount. It's the relationship between the debt and the economy's size, its GDP. Think of it like this. If your salary is growing much faster than your mortgage payment, that mortgage feels smaller and less burdensome every year. It's the same idea. As long as the economy is outrunning the debt, the country is in a manageable position. Now, of course, this doesn't mean debt is risk-free. Not at all. It can become incredibly dangerous. But the important thing is to understand exactly when and why that happens. The real danger is something called a crisis of confidence. It's a nasty chain reaction. It starts when investors, all those banks and funds and other countries, start to doubt a nation's ability to pay its bills. So they stop buying its bonds. To lure them back, the government has to offer much higher interest rates. But that just makes borrowing more expensive, which creates a vicious downward spiral. And this gets to the core truth of the entire modern financial system. It's not really built on gold anymore. It's built on a shared belief. The system is manageable because everyone believes it's manageable. The moment that collective confidence starts to crack, the whole structure becomes incredibly fragile. So, let's circle all the way back and answer our original question. Why are all countries in debt? Because our modern global economy is fundamentally designed to run on borrowing. Because we've decided that economic growth is almost always better than painful cutbacks. And because huge expensive crises are just a fact of life. This isn't a flaw in the system, it is the system. So, knowing all that, you start to realize we've been asking the wrong question this whole time. The real mystery isn't why there's so much debt, it's something way more important. The question that truly matters isn't why is every country in debt, it's are they using that debt responsibly to create a better future, and can they actually manage it over the long haul? Because in the end, debt is a powerful tool, and just like any tool, it can be used to build or to break. The difference is all in how you use it.